I have been trading Forex for 10 years, and this is why I created a YouTube channel to share my experience. Profitable trading contradicts our feelings. Long-term statistics of the Forex market show that traders on average sit out a loss twice as long as they keep the current profit. They prefer to quickly lock in a profit, not allowing the price to reach its goals. Changing this philosophy is the key to success. Quickly cut the stops and let the profits grow to the predetermined level of the strategy. Small players do not know how to keep a profit, which is proved by the statistics of the cryptocurrency market. Throughout December 2020, traders with wallets from 1 to 2 years old actively sold Bitcoin, reducing the deposit. During this time, the cryptocurrency has grown from $30,000 to $59,000. Now pay attention to the balances of wallets aged from 5 years. They are rapidly growing along with the value of BTC. All strategies in one form or another have already been invented. The probability of finding a new strategy is too small. For the second century of the existence of stock trading, traders have gone through and tried a significant number of options for trading systems. By the way, among them there is no grail with 100% positive inputs, but this does not mean that you will not find it. In most cases, it all comes down to the invention of the bicycle. Isn't it easier to take advantage of existing developments without spending time searching? The second option is to trade without indicators based on market information. The site has data on open positions and stop losses of traders from the broker OANDA, on the basis of which you can open trades against the crowd. When you get into the public, the strategies really work worse. 10-year observations of the site show that automated trading systems, expert advisors, after the publication of an article with a description and distribution on the main page, reduce the profitability of the strategy. It is difficult to give an exact explanation for this. The reason is far from the mass use of the algorithm. The robot posted on the TLAP site is not installed by such a large number of people. Perhaps this is the fault of the algorithms of market makers that adapt to the stops of the new strategy. The only advice on how to get rid of the public effect is to focus on evaluating the work of the expert advisor for a long period of time. You need to wait for a deal, not look for it. Any strategy generates an uneven density of trades. During their absence, the trader begins to intensively search for inputs, breaking the rules or inventing signals. Sometimes they close in profit, but this is an exception. In the medium term, such searches only increase the unprofitability of the strategy. The most profitable trades are usually the most obvious, requiring patient waiting instead of active searching. A trader simply cannot pass by without opening such a position. The income does not depend on the amount of effort. The profitability of trading depends on a well-chosen and tested strategy and money management, which can be found by spending not so much time studying the theory. A working strategy can continue to make a profit for quite a long time, while the trader does not have to put much effort. This violates the usual postulates of proportionality of effort and remuneration for work. This is not the case in the financial market. Think of the Winklevoss brothers, who managed to get Mark Zuckerberg to pay for the money by investing millions in Facebook shares and then buying Bitcoin many years ago. The purchase of promising assets made them billionaires, but they earned this money simply by holding a position in the growing Bitcoin. You must have an income that is independent of trading. The bet that the income from trading will cover everyday needs is wrong. Most of the leading and talented traders had a side permanent income. Larry Williams sent out paid forecasts in bulletins, which he is still doing, and Jesse Livermore opened a deposit and received interest as a rentier. When entering the Forex market or speculating on other instruments, a beginner should satisfy as many needs as possible from the Maslow pyramid. Ideally, satisfaction at all levels will allow you to invest in long-term projects. In the example above, the Winklevoss family declined monetary compensation by taking Facebook shares that could not be obtained until the company went public. The brothers were millionaires and could afford to wait for the release of the first social network on the stock exchange, earning more than $200 million. They did the same with Bitcoin, but this investment is held by the twins to this day. Forget about being smart. Traders often forget that a market forecast is a probability, not a dogma. Some people believe in their own analysis so much that they refuse to notice reversals and obvious trend changes. Such a dispute with the market is always resolved not in favor of the trader. Any level of acquired knowledge and skills will reduce, but not eliminate, the percentage of erroneous trades and forecasts. Much worse is the situation of holding a losing trade for fundamental reasons. A common reason for this tactic is an error in the forecast written in the comments. The trader tries to save face by draining the deposit, although it is always possible to refer to an error. Markets are ruled by emotions. The markets are irrational. The asset price depends more on the mood of the bidders than on the economic indicators. For example, oil often falls under sales or, on the contrary, soars to a value that stops the economic growth of oil-dependent countries, gold reaches the level of a 4-digit exchange rate, and so on. If in the XX century professional traders were behind irrational movements, then in the 21st century the effect of social networks appeared. The Wall Street Bets community on Reddit periodically teams up to counter hedge funds selling weak stocks. The symbol of their struggle was the attack on the GameStop papers, which was dealt with by the SEC regulator in the U.S. Congress. Traders from this social network carried out an attack on silver, whose quotes rose by 10% at the time of the fall of other metals, bought the Doge cryptocurrency, which grew by thousands of percent, carried out attacks on BlackBerry and AMC shares. Despite the actively promoted legend of the victory of retail traders over hedge funds, in reality, professional traders are behind the subcredit, masking market manipulation behind the activity in social networks. This is a forced strategy after the tightening of laws and methods for detecting insider trading. Regulators have not finished the investigation. Perhaps among the victims will really be those who sincerely believed in the fight against hedge funds. The stock price of these companies has increased, but their value has more of an emotional component than a real valuation. However, you should not try to short such stocks in the hope of making money on a burst bubble. Think about Bitcoin, which continues to set price records after 12 years. Patterns and statistics are worth paying attention to. Seasonality, reporting, dividends, tax payment periods, and other things that happen periodically cause a predictable market reaction. Many traders know about the Christmas rally, about the growth of the national currency at the time of payment of taxes, seasonal fluctuations, but do not build a strategy on this. Below is the yield of the most famous investment funds. In the first place is the Jim Simons Medallion Fund, which trades only on periodic patterns. At the same time, they do not have the highest rates of correct forecasts, just over 50% of profitable trades, but a large number of assets and the correct use of leverage make it the most profitable fund in the world. Metožadēni are everything. Traders tend to find a strategy with a large number of trades closed in plus win rate. Ideally, this is the grail, where 100% of orders are closed in plus. The following table of expectation, the ratio of money management and win rate, shows what is really important for the strategy.